Yes, let's begin. Okay guys, let's start. Okay, branch accounts, full focus. Okay, there is not little concepts, there are lot of concepts. Okay, now, first of all, tell me what is a branch? A part of the business, correct? Imagine you are doing business, you started business in Chennai. You started manufacturing a product, you are selling that product, good market is there for that product. No problem at all, very good market is there. Clear? Now you feel if in Chennai there is this market, in Mumbai also there might be some market for this. So you think that okay, I should start selling in Mumbai as well. Correct? But if you yourself go to Mumbai and start selling, then Chennai market will be affected. You don't want to take risk over here. So what you want to do, you want to sell there as well. So you'll open a branch there. A part of the business will be opened. And then you will send goods from here to there. You will send goods from here to there and ask them to sell. Clear? So still, can you see centralized control? Lot of businesses these days, they are having centralized control. One place they are controlling, especially this food related, no? Okay, they'll have one cloud kitchen somewhere. And from that place, they will distribute everything. Clear? In fact, even the Baskin Robbins ice cream that you are eating, it is not manufactured here. It is coming from somewhere. So nobody knows the recipe. It is coming here and it is just sold here. Even if you are taking the franchisee of that, you are not going to manufacture it. You will not know how to manufacture also. Even Amul, if you take the franchisee of Amul, so many different products, varied products, but it's manufactured somewhere else. In fact, some years earlier, I think couple of years earlier, Amul started selling this camel milk. Camel milk. It is actually supposed to be very good, it seems, for the health. But imagine the way they have set up the mechanism of their business. The camel milk was collected, obviously from Rajasthan or something, they used to collect the camel milk. And evening if it is collected, it used to be in the shelf next day morning of all the stores. That is how quickly they used to transport. Logistics was very strong. So next day morning or next day afternoon, it used to be in the stores. The validity was there. It was like I think only 3 days or 4 days validity it was there for that milk. But it didn't taste like people are used to cow's milk. So it didn't taste like that. It had like no taste at all. That's why the market didn't click. But otherwise it seems the nutrients are little more. Okay, so that is how it works. So that place where they are doing that decision making, that is called as what? That place where all the decisions are taken, what is that called? That is called as head office. That is called as head office. Head office is the place where all the decisions are taken. Clear? Now, when we are talking about branch accounts or when we are talking about branch, we divide this into two categories. Shh, guys, focus. Later in the problems, I'm not going to explain. Yes, we are dividing this branch into two categories. One is called as inland branch. What is inland branch? Within the country. Within which country? Within the country where head office is located. Within the country where the head office is located. So it is called as inland branch. The other one obviously is foreign branch. Other one is foreign branch. Clear? Now foreign branch, we are going to apply AS 11 principles and we are going to learn. So we will do it at the end of branch accounting. Now when we are talking about inland branch, in inland branch again we have two categories. We have two categories. What are the two categories? One, it is called as dependent branch. And the other one is independent branch. One is dependent branch, the other one is independent branch. What is a dependent branch?
Depends on the head office.
It is completely dependent on the head office. So it is basically like they tell, okay, dependent branch works like an extended arm. Okay, whatever body instructs, that only arm will do. Are you getting my point? So dependent branch is basically whatever head office tells, that only they do. Head office will send the goods. They will collect the goods. Head office will tell, sell the goods at this price. They will sell the goods. They have some expenses. Obviously, branch means there will be some expenses, right? So in dependent branch situation, even expenses can be paid by head office only. You tell me what the expenses, I will make the transfer directly. Clear? Dependent branch. They don't have any control over anything. Okay, and there can be a situation, even for their small expenses, head office gives the petty cash. Head office can give the petty cash. So tell me one thing, whatever is happening in branch, it is controlled by head office. This is called as dependent branch. When branch sells the goods, they will get the money, right? If they make cash sale, they'll get money. If they make credit sale, they'll get money from debtors. Correct? Whenever they get money, in case of dependent branch, most of the times, end of the day, they'll go and deposit the money into head office account. Clear? That means they have no control. They are just working on the instructions of head office. Is this clear? This is dependent branch. Then we have independent branch. That means they are taking decisions on their own. Okay, they are taking decisions on their own. Okay, imagine there is a hotel where the one branch is in Chennai, one branch is in Mumbai. Okay, independent branch. That means Mumbai branch will decide, okay, what is the taste of the customers here? According to that, I'll manufacture. If it is dependent branch, Chennai branch will send the goods from here. That only they will sell. Are you getting the difference between the two? Yes. Now, our job is what? To do accounting, right? Accounting is our job. Now, if dependent branch, they will not do accounting. Dependent branch will not do accounting because everything they're following are instructions only, right? So in dependent branch situation, what happens? Head office in their books, they will maintain the records for branch. So for dependent branch, what happens? Head office in their books, they'll maintain the records for the branch. Is it clear? So dependent branch, okay, transactions recorded by head office in their books. Clear? What about independent branch? Their branch maintains books of accounts. Branch maintains books of accounts. Is that clear? Okay, what about foreign branch? Obviously, they have to maintain books of accounts because there will be the law of the land. They cannot tell that I will not record anything. My head office is sitting in India. They will do everything. It's not possible. They will record. In fact, they will record as per the currency of that country. Then our job is to convert that into Indian currency. That's why we have AS11 over there. They will do everything and give me trial balance in dollar. My job is to convert that dollar into rupee and add it to my trial balance. Clear? That we will do at the end of this. Now, do not write anything. I'll give you sufficient time. Let's try to first understand all the concepts. Okay, 15 minutes, 20 minutes, whatever it's required for you to write, I will give you time later. Just understand now. Okay, now, when it is in dependent branch, we focus on dependent branch first. Then we will go into independent branch, then we will go into foreign branch. Okay, now in dependent branch, there can be a situation where goods are sent. Goods are sent by whom? Head office is sending goods to branch, correct? So head office can send goods to branch at cost. They will give the goods at cost only until sell it at whatever price you can, correct? But there is a risk. No, branch might not put effort to sell it at little higher price. I gave the goods at 100. Branch might be happy with selling at 105 because branch, what they are going to lose? Whatever they are going to lose, head office will lose. No. Branch will be like, okay, 105, I'll sell it at 105. Are you getting my point? That's why goods can also be sent at invoice price. What is invoice price now? I am giving the goods 100 rupees. I know the cost is 100 rupees. I am not telling him that the cost is 100 rupees. I am telling him take it at 120. 120 is the price. You take it at 120, sell it at 120. No pressure on you. If you can sell it at higher than 120, sell, no problem. Clear? So now I know fixed 20 rupees profit I have made. Are you getting this? This is when goods are sent at invoice price. And then goods can also be sent at wholesale price. Goods can be sent at wholesale price. What does it mean? I am the head office is the wholesaler, branch is the retailer. I will send to the branch at, I know cost is 100. I will send it to the branch at 120. Okay, and I will tell the branch, you sell it at 150. So head office will sell it at wholesale price, branch will sell it to the customer at retail price. Are you getting my point? So these are the three situations that can arise. Now, when we are having this entire situation, we have to do the accounting, right? We have to do the accounting. For accounting, we have first method, which is called as debtors method. First method, that is debtors method. Second method, that is stock and debtors method. Clear? Third one is trading and P&L method. Tell me one thing. All these methods, who are going to follow? Or who is going to follow? Head office only. Branch doesn't know about any of these methods. Head office will follow one of these methods to prepare and find out what is the profit we are making in the branch. Head office is concerned about what? I sent goods, it is getting sold over there, I got money, I am paying for the expenses, I need to know now how much profit did I make by having this branch. So using one of these methods, head office will calculate the profit that the branch is making. Debtors method, stock and debtors method, trading and P&L method. The ultimate goal is to find the branch profit. Okay, now let's start with debtors method. Okay, simple accounting it is, but you have to think little. Now, tell me one thing. If it is debtors method, okay, we need to identify, right, in the exam what method it is. They will tell you debtors method, stock and debtors method, or they will tell you prepare necessary ledger account in the books of head office. When they tell ledger account, it is debtors method. If they tell you prepare necessary ledger accounts, multiple stock and debtors method. Are you getting my point? In debtors method, we have only one ledger where we are going to record everything. Stock and debtors method is a detailed method. We are maintaining multiple ledgers. So if they tell you ledger account, or if they tell you branch account, that is debtors method. If they tell you ledger accounts, then it is stock and debtors method. Clear? Now debtors method, one tip. Whenever we are following debtors method, one tip you have to keep in mind. Only transactions between head office and branch are recorded. Only transactions between head office and branch are recorded. Other transactions, we are ignoring it. So here, what is head office considering branch as? Head office is considering the branch as my debtor. That is why it's called as debtors method. Clear? Head office is considering that branch is my debtor. And on that basis, they are recording all the transactions. Ultimate goal is to find the profit only. Okay, here, if the goods are sent at cost, if it is at invoice price, maybe we have to add something. Okay, now understand this. In the books of head office, you will prepare one branch account. This branch account will be considered, as a debtor. If it's a debtor account you are going to prepare, will it have an opening balance? Yes. That opening balance will be a debit balance or a credit balance? Debit balance. So can I write 2 balance brought down? Yes, debit balance. Now, understand this. What and all will be there in this? Branch is a debtor for me, right? Now understand, under 2 balance brought down, it will not be one amount, it will be multiple amounts. 1, stock. Why stock? Whose stock is it? The stock, yeah, but stock is sitting where? It is sitting in the branch. Stock is sitting in the branch. That means I have sent goods last year. It has reached them, but they have not yet sold it. It is there over there, but still it is whose stock? Head office. I have to get money, no? I have given them goods. It is my goods only. It is sitting over there. I have to get money. So stock also is debtor only for me. I mean, opening balance of debtor will include stock also. Now imagine I sent stock to them. They sold the stock. They sold the stock. And they got the money. Then, but they didn't give me the money. So there is cash which is sitting over there. That also belongs to me. Understand this entire chain of things. I gave them the goods. They did not sell the goods. It is still there. Those goods are mine. Opening balance. They sold the goods for cash. Cash sales they made. They got the money. They were supposed to send, but 31st of March, end of the day, bank was closed. They couldn't send it. Whose cash is this? Head office cash. Cash. It belongs to me. They sold the goods on credit. They sold to the debtors. So debtors did not pay them. So they did not pay me. Now the debtors are there, no, which is there in branch. Whose debtors are these? Head office only. Head office only. Are you getting this? I have to get money. Clear? Now, apart from this, they wanted one machinery. I gave them machinery and told use. Whose machine is this? Head office. So there can also be an opening balance of asset. Is it clear? Now, after this, they have small expenses to pay for. For that small expenses, I have given them money. That money is not spent yet. Whose money is it? Head office. There can be opening balance of petty cash. Are you getting my point? Indirectly, we are trying to tell that whatever is there in branch belongs to me. Branch has stock, mine. I have to get money. Branch has debtors, mine. I have to get money. Branch has cash, yes, that also belongs to me. I have to get money. Branch has petty cash which is not spent. That also is given by me only. Clear? Branch has asset. That also is provided by head office. Is it clear? These are the opening balances that can be there. Is it clear? Now we start with the opening balance. After that, what can happen? I will send the goods to them. Head office will send the goods to them. Correct? What should be the entry? If I send goods to them, branch has to give me money or branch has to get money? Branch has to give me money. I am considering branch as debtor. If at all I give them goods, debtor balance increases or decreases? Increases. So do you agree that branch account has to be debited? Branch account has to be debited. To what? To goods sent to branch. No HO. In head office books, we will not write head office. In my own books, I will not write my account. Are you getting my point? Everything is being done in head office books. So, branch account debited to goods sent to branch. Do you remember consignment? Consignment account debited to goods sent on consignment. Are you getting my point? So, branch account debited to goods sent to branch. This is when goods are sent by whom to whom? Head office to branch. Is it possible that in the goods that I have sent, they did not like something or they had some problem with some goods? So will they give the goods back to me that time? What should be the entry? Entry. What should be the entry? No buy to. What is the entry? Goods sent to branch account debited to branch account. Can we write? See, they can ask in the exam past necessary journal entries also. Normally they ask ledgers, but they can ask past necessary journal entries. What is this now? What is this transaction? Goods returned to head office. Goods returned to head office by branch only. By branch, yes. Okay, now tell me one thing. Did they get the goods? Did they get the goods? Yes. Will they sell it now? Cash sales. What should be the entry? Cash sales. What should be the entry? No entry. No entry. What was the tip? See the tip there. See the tip. What is the tip? Only transaction between head office and branch to be recorded. Who sold the goods? Branch sold the goods. To whom? Customer. Who are we? Head office. Who sold the goods? Branch sold the goods. To whom? Customer. Who are we? Head office. Is there a transaction between branch and customer? No. That means no entry for cash sales, for credit sales. No entry for cash sales, no entry for credit sales, because it's a transaction between branch and customer. Clear? Now tell me one thing. Customer did not like the goods. They gave it back. What is it? Sales return. No. It is not nothing. It is sales return. Okay. Now tell me what is the entry for it? Nothing. This is nothing. For me, nothing. Why? Branch is not maintaining books of accounts only. That's a different thing. And I will not pass entry because it's not a transaction between me and branch. That means even sales return, you are not going to pass entry. If sales return, there is no entry. Even bad debt, there is no entry. Even discount, there is no entry. All these are transactions between branch and their customer. Clear? Finally, tell me one thing. Branch will get money from debtors. What should be the entry? Debtor made payment. Amount received from debtors. What should be the entry? Branch to? Correct. No entry. Who is giving money? Customer. To whom? Branch. Who are you? Head office. If your neighbor receives money, will you pass entry in your books? No, right? Yes. So amount received from debtor also no entry. Amount received from debtors also no entry. Is it clear? Now tell me one thing. Okay. After they get money from debtors or from cash sale, what will they do with that money? They will send it to head office. They don't have rights to keep the money at all. They have to send the money to head office only. Yes. Now tell me. When amount is sent, shh. What is the doubt? Wait, I understood your doubt. I sent the goods here. 100 rupees. Debit side 100. If it is bad debt, he will not give me money. How much will he give? Removing the bad debt. So on the credit side, when I get the money, bad debt is automatically reflecting here. See over here. Branch account. I sent 100. He was supposed to give me 100 rupees. But he got only 90 rupees. So he will give me only 90 rupees. Can you see the debit is 10? Bad debts debited. Expense. Automatically the net effect will create the expense. Are you getting this? I sent 100 rupees. If at all he sells 100 rupees at 100 rupees only, it will be 100 here. No profit, no loss. If he sells at higher value, 120, then I'll get a profit of 20. Correct? He did not give me money because there is bad debt. He gave me only 90. Now what happens? 10 automatically debited. Debit means loss. Loss will go forward. Are you getting this? So separate entry is not required. I mean not required, no, not there. If you pass entry, it will become double effect. Okay. Now after that, after selling, cash sale, credit sale, whatever it is, head branch got money. Did they get money? Yes. When they got money, what did they do? They will send it to head office. If they send it to head office, what is the entry? What is the entry? What is the entry? Bank account debit to branch account. Forget about cash. So you will write by bank account over here. This is amount sent by received from, okay, amount sent by branch to head office. Is that clear? Amount sent by branch to head office, this should be the entry. So till they send the money, whatever happens with the goods, I will not bother about it. I sent the goods, it's our transaction, I entered. They sold the goods, not our transaction. They did not get money, not my transaction. They got the money, I am not bothered. They gave discount, they have bad debts, I am not bothered. They gave me money back. I'll record it. Is it clear? Okay, now, after this, what can happen? What can happen? They can have expenses, no there? Expenses are there in the branch, no? They have to pay the rent, no, for the branch. They have to pay the electricity bill, no, for the branch. Now, branch expenses paid by branch. There can be situations, head office will tell, you made the sale, you got the money, no, pay your expenses, remaining money you send me. Remaining money you send it to me. Clear? Can that happen? Yes. Expenses of branch paid by branch. What should be the entry? No entry. One more thing gets added over here. Expenses of branch paid by branch. What should be the entry? No entry. Why no entry? Because it's not a transaction between head office and branch. Branch is paying their expense. We are not involved. But can it happen that expenses of branch paid by head office? Yes. What should be the entry? Expenses of branch paid by head office. What should be the entry? We paid the expenses. We have to get money, no? So branch account debited to bank account. Branch account debited to bank account. You can see that there are similarities to consignment. Expenses of consignor we used to record like this. Okay, so you are going to write expenses of branch paid by head office. Expenses of branch paid by head office. Is this clear till here? Now, end of the year or end of the accounting period, what can happen? Again, there will be closing stock, no? You will write by balance, carried down. What and all can be there? There can be stock which is not sold. There can be cash which is not sent to me yet. There can be debtors who have not paid yet. There can be assets which are still there. There can be petty cash which is not given to me. Are you getting my point? Okay, these are the closing balances. Now, why did we do this branch account? Were we so jobless? Why did we do this branch account? What was the purpose? To find the profit. Let's hope that branch made profit. Branch made profit. Tell me what is the entry? Branch made a profit. What is the entry? Why? That profit belongs to me? No. Who is calculating the branch profit? Head office. Branch has no idea that they made profit only in the first place. Branch is not, they are only executing transactions. Finally, all the transactions, I have done the accounting. Where? In the books of head office. After doing the accounting in the books of head office, what am I going to do now? What am I going to do? I made profit, right? Where should it go? It should go to P&L. So I'll write branch account debited to P&L account. Is it going to head office P&L? Yes. Should I write head office P&L? No. Why? When you prepare P&L in your books, you won't write my P&L. Will you write that? No. If it is told in the books of Pawan, it is called P&L account. That's it. It won't be written Pawan's P&L account. Clear? So you will just write P&L account because we are only doing the accounting. We will transfer it. Basically, balancing figure. Okay, this is if there is profit. If there is profit. If there is loss, what you will do? P&L account will be debited for the loss. You will write by P&L balancing figure. Can we have both? Can we have both? Either you made a profit during this period or you are making a loss during this period. Is it clear how the branch account works? In debtors method, only transaction between head office and branch will be recorded. Clear? Now this was what? When goods are sent at cost. Can there be a situation that goods are sent at invoice price? Debtors method. Can you see the variations? What and all variations can happen? Debtors method. When goods are sent at cost, goods are sent at invoice price. Stock and debtors method. When goods are sent at cost, goods are sent at invoice price. Then The trading and P&L method. When goods are sent at cost, goods are sent at invoice price. Wholesale price method, slight variation of this method will be there. Okay. So 6 variations already we saw. 7th variation is wholesale price. Then independent branch. Then foreign branch. The major core of this chapter is the dependent branch. Dependent branch is the core. In independent branch and all, they cannot test you too much. Okay. So debtors method, when goods are sent at invoice price. Do you agree? The rule is same. Everything is same. Only certain things will change. What are the certain things? Everything is same. Certain things will change. Clear? Now, listen. Listen. Again, I am going to prepare a branch account. Whatever is repetitive, I am not going to show it. Whatever is repetitive, I am not going to show it over here in this ledger. Will there be 2 balance brought down? Will there be 2 balance brought down? Yes. In that there are many things. We will ignore all the things. Only stock we'll focus on. Tell me, this stock will be at what price? It will be at invoice price. Abnormal loss, credit. Abnormal loss account debited to branch account. Like what we were doing in consignment. What? Branch manager's commission. We will record it. It's a transaction between head office and branch. In branch, if there is a manager who is supposed to get commission, I will pay that commission. Branch account debited to bank account. Are you getting this? Branch account debited. I did not pay the commission. To commission payable. Outstanding commission. It's a transaction. From where will they get the commission if I don't pay it? You cannot consider that as a transaction between branch and somebody else. If branch has employees, we'll pay salary. No, who will pay the salary? Head office only will pay the salary. Like that, one of the person is this manager. Clear? Now, when goods are sent at invoice price, stock is at invoice price. Stock is at invoice price, what will we do? Whenever stock is at invoice price. Now, here understand this. There is this concept called as stock reserve. What is this stock reserve? What is this stock reserve? Unrealized profit or profit which is not yet earned. Clear? When head office sends goods, to the branch, when head office sends goods to the branch at invoice price. Clear? No problem. That will not create stock reserve. What will create stock reserve is, I sent goods to the branch at invoice price and they are still unsold. I think we have done stock reserve in consolidation. Okay, they are still unsold. So what happens over here? It is unsold. That means in the closing stock there is a profit. In closing stock there is profit. This is called as unrealized profit. So what has to happen now? Stock reserve has to be created. For what? To eliminate the unrealized profit. To eliminate the unrealized profit. Tell me, what is unrealized profit? Profit that is not yet earned by the company, by the business. For head office, it's not profit. I sent to branch, made profit. Branch did not sell. So it is like we made profit by selling to ourselves. No. Okay, so unrealized profit. What will be the journal entry? We are in debtors method. Journal entry will be branch account debited to stock reserve. Branch account debited to stock reserve account. Is it clear? Are you following this? Branch account is debited because we have to remove the profit. Expense, it's like an expense, removing it. Correct? Stock reserve is a liability. Stock reserve is created to reduce the value of stock. Stock is an asset. To reduce an asset, what you have to do? You have to create an opposite thing. Opposite thing is liability. Is this clear? So now tell me one thing. This year I will create stock reserve. But next year it will be sold, no? then the stock reserve is not required, right? Same way, opening stock was last year's stock. That will be sold, right, this year. So what we will do? We'll remove the stock reserve. Okay. See what happens in the next year. Next year, it is no longer unrealized profit. It is expected to be realized profit. So what we will do? Reverse the entry. Stock reserve account debited to what? To branch account. Stock reserve account debited to branch account. Is this clear? Are you following this? Any doubts with this? No. Now what? Now tell me, what should I do? If it is sent at invoice price, automatically you saw stock reserve. See, remember this. You saw stock reserve at invoice price. It is at invoice price. Immediately what should you do? Opposite effect. Buy stock reserve to eliminate this. Is this clear? Now, will we send the goods? Tell me, what is the entry for goods sent? Branch account debited to goods sent to branch account. Is it going to be at cost? This will also be at invoice price, correct? Now, what should I do immediately? Immediate reflex action should be there. When you see something at invoice price, immediately you should know opposite effect has to be created. What is the opposite effect? This was called as removal of loading. Removal of loading. So what we will do? This is sent at invoice price. Opposite effect I'll pass. Buy goods sent to branch account. Okay, this is the profit portion. This is the profit portion. Now understand this. What profit portion is this? This is basically invoice price minus cost. Now your question should be, if I am going to anyways reverse, why am I recording it at invoice price? I can show the net only, no? If I am anyways going to reverse it. Now what happened? By showing invoice price and removing the profit on the opposite side, it became cost. Correct? Why did I even show it at invoice price in the first place? No AS2 here. What is the logic here? If I show the net effect, how will the reader even get to know that the goods were actually sent at invoice price? Are you getting my point? Disclosure. How will I even get to know that it was sent at invoice price if I show net effect? Clear? So what we will do, every transaction is different, right? So for sending the goods, it was sent at invoice price. So we recorded at invoice price. Now the goods are at invoice price. So removal of profit. This is unrealized profit. Removal of profit. So we pass the opposite effect. Is this clear? This was called as, I think, reversal of loading effect or something like that in consignment. Okay, now tell me one thing. Other than that, when I pay the expense, when they send the money, there is no change at all. When I pay the expense, same entry. When they send me the money, same entry. When they make the sale, same entry. We are not bothered. Clear? But again, in the balance carried down, there will be some stock, right? And do you agree that this stock will be at invoice price? This will be at invoice price. If this is at invoice price, what should we do? Create the stock reserve now. So you will write to stock reserve account. This is again the profit portion. So you can write invoice price minus cost. Is this clear? Here also you can write invoice price minus cost. These are the additional things that will happen if at all goods are sent at invoice price. Otherwise the branch account will look the same. No change at all. Clear? Any doubts in this? Three amounts will be same. How? My opening stock is 100. On that profit portion is something else. The goods that I sent is 2000. On that profit portion is something else. My closing stock is 300. On that profit portion is something else. How can they be same? They cannot be same. The computation is same methodology. Yes. Branch account is debited because usually what is the entry for stock reserve? P&L account debited. Why P&L account debited? Because we have to remove this from profit. Now here branch profit is computed where? In branch account. In branch account, whatever profit is computed, it will go to the head office P&L, correct? So if I remove it from branch account, then the reduced profit only will go to head office P&L. Are you getting my point? Normally, normal situations, the entry for stock reserve is P&L account debited to stock reserve. Why P&L account debited? Because it is unrealized profit. I have to remove it from P&L. Now here branch profit it is. That is being computed where? In the branch account. If I remove it from branch account, then the remaining amount only will, correct amount will go to head office P&L. Are you getting my point? Otherwise you should let it go. Then from head office P&L again I have to remove it. Are you getting my point?
Sir, this is
Revised?
revised.
Reversed. Why it is reversed? Is your question that?
Revised amount.
What is revised amount? Previous year I created stock reserve because the stock was not sold. Now this profit is there. Clear? We removed that. Next year why I am reversing is because this year I am expecting to sell it. Opening stock we are expecting to sell it. Let's hope that we did not sell only this year, opening stock also. Don't worry, that opening stock will be there in closing stock at the end of the year. Again you will create stock reserve. Are you getting my point? Starting of the year we are reversing, thinking that opening stock will be at least sold this year. If you don't sell, don't worry, nothing to worry. That will be there in closing stock at the end of the year. You will create stock reserve again. It will become a chain. Is this clear? This is your, debtors method. When goods are sent at cost, when goods are sent at invoice price. What is the next method? Stock and debtors method. Yes, you can do one thing. You can start writing this. Okay, I think it will be a huge chain of events. Shh. Let's begin, guys. Next method. Stock and debtors method. Stock and debtors method. Yes. Shh. Stock and debtors method. In stock and debtors method, what we are going to do is list of ledgers maintained. List of ledgers maintained. What? Wholesale price method is separate category only. Wholesale price method we will see later. It's a different category altogether. Okay, list of ledgers maintained. Branch stock account, branch debtors account, branch cash account, branch petty cash account, branch assets account, branch expenses account, branch P&L account. These are the ledgers that we are supposed to maintain under stock and debtors method. In debtors method, what was the tip? What was the tip in debtors method? Only transactions between head office and branch to be recorded. Here the tip is all transactions of branch to be recorded. All the transactions of the branch to be recorded. This is the rule under stock and debtors method. This is the rule under stock and debtors method. Clear? Now, basically, no transaction will be ignored. Every single transaction will be recorded. In debtors method, what we used to do? We used to tell this is a transaction between head office and branch and its customer. We used to ignore, correct? Now the stock and debtors method, first thing, when goods are sent at cost, then we will see what happens if goods are sent at invoice price. Clear? Now, I am going to tell you the transactions and you have to tell me the journal entry and we'll proceed like that. I will tell you the transactions, you have to think of the journal entry, tell it and then write it. Okay, first. Huh? Why? Wait, I'll give you time to write. Oh, you have not written this. Okay, write this fast. Or it's okay. You write everything together. Now just tell me the entries. I'll give you time everything to write together later. Okay, now transactions. Okay, Tejas, I'll put you to first bench. Transactions. Yes. Goods sent by head office to branch. Goods are sent by head office to branch. What should be the entry? Where is branch account? Where is branch account? Why did we write list of ledgers if you are going to use one new ledger from our pocket? Branch stock account. Because if I send goods, what will happen? The stock will increase. So the entry will be branch stock account debited to goods sent to branch account. GSTB is goods sent to branch account. So branch stock account debited to goods sent to branch account. What if goods returned by branch? Goods returned by branch. What will happen that time? You are going to reverse the entry, no? What is the reverse entry? Goods sent to branch account debited to branch stock account. Goods sent to branch account debited to branch stock account. Is this clear? Next. Expenses at branch paid by branch. Expenses at branch paid by branch. What should be entry here? We have one ledger for branch expenses, no? So the entry will be branch expenses account debited to what? Who is paying? Who is paying? Head office. Where are we preparing all these ledgers? Where are we preparing all these ledgers? All these ledgers are prepared where? In the books of? In the books of head office. So now if I write branch expenses account debited to bank account, what will happen? Money will go from head office bank. Who is paying? Branch only. Branch expenses account debited to branch cash account. Branch expenses account debited to branch cash account. For branch it is expense and they are only paying. So their cash should reduce, no? Are you getting this? Expenses at branch. Who is paying? Branch is paying. So how can I write bank? Bank is head office account, no? Now, expenses at branch paid by head office. Expenses at branch paid by head office. What should be the entry? Branch expenses account debited. Is it expense for the branch? Yes. Did they pay it? No. Who paid it? Head office. To, I don't have to write head office bank account because I am already in the books of head office only. I don't have to write head office bank account. Is it clear? Next. Fifth. Cash sales. What should be the entry? Cash sales. Will you pass entry first of all? Will you pass entry? Yes. All the transactions you are going to pass. That is the first thing you wrote. If here also you are going to ignore transactions, what is the difference between debtors method and stock and debtors method? Debtors method was a summary kind of a method. Here they want to see detailed result. That is why stock and debtors method was introduced. Tell me what should be the entry? Branch cash account debited. Why branch cash account is debited? Because they got money. To what went away? Stock. So to branch stock account. Branch cash account debited to branch stock account. What about credit sales? Credit sales. Credit sales. Pawan, come to the second bench fast. Fast. Sit in the third bench. Not even third bench. Fourth bench you sit. Fast. Come to the fourth bench. We will keep them at peace and we'll keep you at peace. Stay in the fourth bench so that there is enough gap between the next bench and the previous bench. Yes. No. Sit there only. No. Credit sales. Tell me, Pawan, what is the entry for the credit sales? No. Are you Pawan? Then he will answer. Why are you answering? Credit sales. Think and tell me. I want you to tell the answer. Till then we are not moving forward. 2. I don't know what that means. Tell the entry I told. There is no branch account only. These are the ledgers. Branch debtors account debited to branch debtors account debited to branch stock account. Is that right? Yes. Why? Branch debtors are debited because we have to get money. Branch stock is credited because stock reduces. Stock goes out. Clear? Next. Sales return. What should be the entry? Branch stock account debited to branch debtors. Stock increases again. You got the stock back. Stock increases. Branch stock account debited to branch debtors. Debtors decrease because they are not going to pay you money. They gave the goods only back to you. Why will they pay you money again? Clear? Next. Bad debts or discount allowed, etc. Any of these kind of expenses. What will be the entry? Bad debts or discount allowed. What should be the entry? Branch expenses account debited to branch debtors. Discount allowed is an expense. Bad debt is an expense. Branch expense will be debited. And both of these expenses will reduce the debtor balance. If you give them discount, they will not pay you money. If it is bad debt, anyways, they are not going to pay money. So, branch expense account debited to branch debtors. Next, after this, amount received from debtors. Amount received from debtors. What should be the entry? Branch cash account debited to branch debtors. There is a separate debtors account, head office debtors. If you write branch cash to debtors, it will go and fall. That is why in rectification of errors you used to have amount received from Mahesh Chan put into Suresh Chan. Amount received from Shah and Company went into Shaw and Company. Because of these kind of errors. So branch cash account debited to branch debtors account. Branch cash account debited to branch debtors account. Branch cash is debited because money comes into the branch. Branch debtors account is credited because debtor balance reduces when they make the payment to us. Clear? Amount received from debtors. Next, if I get money, what will branch do? Branch will send the money to head office. Amount sent by branch to head office. what should be the entry? Bank account debited to branch cash account. That means when you're sitting alone, answers are coming, right? When you focus. We'll make this permanent place for all the remaining subjects of group 2. Audit will tell Karthik sir specifically to make you sit in this bench and we'll shift them. Sit. Karthik sir only told, so sit. Yes. Amount sent by branch to head office. Done. Can there be a situation that head office will send money to branch? For what? What expenses? What expenses? Petty expenses. Amount sent by head office to branch for what? For petty expenses. What should be the entry? Branch petty cash to bank. Not branch cash to bank. Branch petty cash to bank. Because this is given for what reason? Branch petty cash account debited to bank account. Clear? Next, petty expenses. Petty expenses at branch. What should be the entry? Petty expenses at branch. What should be it? We send them money, no, telling that for small expenses, you use this money. Now their small expenses are there. What should be the entry that time? That means money went up. Branch petty cash account debited. Money is increasing or decreasing? Branch? No, full entry? There was no ledger like that. Branch petty cash. Branch expenses account debited to branch petty cash. Branch expenses account debited to branch petty cash account. For branch it is expense. Petty, big, doesn't matter. Expense is expense. Branch expenses account debited to, didn't pay from the branch cash. It is paid from the petty cash. So branch petty cash account. Clear? Finally, okay, closure of ledgers. Closure of ledgers. So many ledgers are there, no? First we will talk about branch stock. Branch stock. It will have a closing balance. Correct? That what is that closing balance? Yeah. Debit balance, but it will be written on the credit side. By balance carried down. Closing balance. It is debit balance only. Okay. Now this branch stock which has debit balance, okay, this is what? Closing stock. Closing stock, correct? But have you seen branch stock was debited when the goods came in? Is that at cost? Is that at cost? Branch stock was credited when the goods went out. Is that also at cost? No, that will be at selling price. Selling price, correct? Are you getting my point? So, branch stock is debited when the goods come in. This is at what price? Cost. When you made sale, what entry you passed for cash sale? See the entry for cash sale. What is the entry for cash sale? Branch cash account debited to branch stock. What is the entry for credit sale? Branch debtors account debited to branch stock. So both these entries, do you agree that the selling price is put into stock account? Debit is at cost, credit is at selling price. So will you get a difference in the branch stock? Basically, they have used in this case branch stock like a trading account. Branch stock is literally used like a trading account. Debit the purchases and opening stock, credit the sales and closing stock. So here, okay, the difference what is there in branch stock will be transferred to branch P&L account. This is basically in the nature of gross profit. It is in the nature of gross profit. Is this clear? So whatever difference is there in branch stock, it will get transferred to branch P&L. What about branch debtors? Is there anything to be transferred here? No, it is just the closing balance. See the balancing figure, closing balance of debtors carried forward. Clear? What about branch cash? Branch cash, it will be closing balance, but it is dependent branch. If they tell that amount should be sent to head office, then whatever amount in hand should be sent to head office. For sending the amount in hand to head office, you have already written the entry. What is the entry? Bank account debited to branch cash. What about branch petty cash? It will just have a closing balance. Clear? If you have branch assets, in case you have branch assets, that will also have a closing balance. Clear? What about branch expenses? What about branch expenses? Will that also have a closing balance? No, expenses never have closing balance. So what will you do? You'll transfer the branch expense to branch P&L. Branch P&L. So you'll pass the entry branch P&L debited to branch expenses account. Branch P&L account debited to branch expenses account. Till now all the ledgers are done. What is the last ledger that is there? Branch P&L is there. What will happen to branch P&L? Either you can have a profit or you can have a loss. If it is profit, what should be the entry? Branch P&L account debited. Branch P&L account debited to P&L account. Which P&L is this? Head office P&L, but we will not write head office P&L because it is already in the books of head office only. So if it is loss, you will write P&L account debited to branch P&L account. P&L account debited to branch P&L account. Is this clear? Any doubts with this? This is stock and debtors method when goods are sent at cost. When goods are sent at cost. If goods are sent at invoice price, there should be something extra. Clear? Yes. This much you write. Then we'll go into the next method. Start writing from here. Okay, we have one last theoretical topic to discuss. That is stock and debtors method only. Okay, what if goods are sent at invoice price? This is one thing that we need to know. Goods are sent at invoice price. Now, stock and debtors method we have already seen. No, so many ledgers we are supposed to prepare. All those ledgers will be there. All those ledgers will be there. One additional ledger will be prepared. Additional ledger to be prepared. We are going to prepare one additional ledger. This ledger is called as branch adjustment account. This is one additional ledger which is called as branch adjustment account. Clear? Now, if at all expenses are paid, if sales are made, all those entries will not change. Expenses, sales, bad debts, expense, petty expenses, nothing. Amount sent, amount received, all those entries will remain same. But if goods are sent by head office to branch account. Okay, goods sent by head office to branch. Now understand this entry. That time what did you do when it was at cost? Branch stock to goods sent to branch. Here you will write branch stock account debited. Branch stock account debited. And this will be at invoice price. It will be at invoice price. We sent at invoice price, so stock should be showing invoice price only. So it will be at invoice price. Clear? To goods sent to branch account. This will be at cost. This will be at cost. That profit portion is there, no? It will go to branch adjustment account. The profit portion. Clear? What we do now in our normal ledger, same thing we are doing here also. Same thing we are doing. Why? In debtors method, what happens? The debit side is at invoice price. So to nullify that, I create one credit. Here also branch stock is at invoice price. To nullify that, I have a branch adjustment account. Are you getting this? What did we do in debtors method? Debtors method, branch account debited to goods sent to branch at invoice price. To remove that profit portion, what did I do? Goods sent to branch account debited to branch account. Clear? Here what happened? Branch stock is at invoice price. To nullify that, what should I do? I should create one more ledger which has opposite balance to branch adjustment account, the profit portion. Is this clear? Now this is the entry when goods are sent by head office to branch. What if goods are returned? Goods are returned. We are going to reverse the entry, no? Goods sent to branch account debited. This will be at what value? It will be at cost only. That time you put cost, you remove cost now. Branch adjustment account debited. This will be at the profit portion. Okay, to branch stock account at invoice price. At invoice price. Is this clear? Next. Okay, these are the two things that will create trouble. But now what you have to remember is branch stock has a opening balance, right? Branch stock will be having a opening balance. This opening balance is at what price? This opening balance is at what price? It will be at invoice price only. Cost plus? That is invoice price. Cost plus stock reserve is what? Invoice price only, no. It will be at invoice price. But we can't show it at invoice price. Remember in debtors method, it was at invoice price. So opposite effect we used to create. So here also you have to create the opposite effect. No. Because branch stock is at invoice price. It is at invoice price. Now branch adjustment account will have a opening balance which will be the profit portion. This has debit balance. This has credit balance. Nullified. What we used to nullify in one ledger, we are nullifying using multiple ledgers. That is the only thing. Why we are not using in one ledger? Because debtors method was a summary method. So everything has to happen inside that ledger only. But stock and debtors method is not a summary method. No, it's a in detail method. Everything is in detail. So stock you keep separately at invoice price. But we have to nullify that. AS2 is there. To nullify that, what we are doing? Profit portion, we are creating a different ledger only called branch adjustment account. Is this clear? Same way, do you agree? Closing balance also will be there at invoice price. Closing balance will be there in stock at invoice price. So what you will do? Branch adjustment also will have a closing balance for the profit portion. For the profit portion. Is it clear? Now, understand this. When we do this, when we are closing the ledgers, what we had discussed that time, closing the ledgers, everything is fine. Only branch adjustment closing we have to see now, correct? Branch adjustment account will have a closing. How to close? Opening balance, closing balance, we know how to calculate. If there is a balancing figure, that is realized profit. What is opening balance? Unrealized profit. What is closing balance? Unrealized profit. Because stock is at invoice price, we are creating that unrealized profit balance over here. So if this ledger has a balance, that is the realized profit. That means profit that is earned. So here what will happen? Profit will be transferred to branch P&L. Profit will be transferred to branch P&L. This we have to see practically how it works when we solve problems. Clear? But 100% there will be some balance here. Why? Stock opening balance is here. When goods are sent also, that profit portion you put it to branch adjustment account. Closing stock also you nullified with the branch adjustment account. So adjustment account will have some balance. That is the realized profit. That is the realized profit. Is this clear? This is the only additional thing which is there in stock and debtors method. Yes guys, you can write it from here. Additional ledgers to be prepared.
Instead of writing that, send to
branch, invoice price. We are saying invoice price, sir. We want to disclose.
You will record it at cost and adjust it over there. We can do that, but then it will not disclose the fact that we got it at invoice price. No. If I look at branch stock account, I should know that goods have come at invoice price. If I do that, my accounting treatment same, double entry system of accounting, you are adjusting. But if someone looks at the branch stock account, they will not get to know that it was at invoice price. They will see cost only. That fact that the goods were actually sent at invoice price is hidden. Did you understand? What you are doing is correct, but disclosure will not happen.